is where we're headed in terms of an uptrend.
Watch Yorba.tv with Michael Yorba.
Right now, we still have a liquidity crunch.
A new network for the serious investor.
Indicators have to complement each other.
Yorba.tv.
There's good news on the horizon.
Cutting-edge information from the trading floor.
Commodity markets are pretty much in a frenzy.
Live on the web at the closing bell.
Record high in crude today.
Weekdays, 3 to 4 p.m. Central on Yorba.tv.
The risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only, and not the opinion of any firm the author may be affiliated or associated with.
All right, welcome to Commodity Classics. I'm Michael Yorba, your host. If you're in our social network, you got a little message from me this morning. And this is Pete Iannaci. I pronounced it correctly, right?
Absolutely, Michael.
Thank you.
To be on.
My pleasure. Good to have you with us. Now, Pete has a company. It's called Esprit Solutions, right?
Correct.
And he's got some technology that is very, very cutting edge, if not breaking the envelope. And Pete is going to co-host this show with me. What we're going to do is we're going to bring in guests ad hoc through the social network. Joe Savard is going to be working on the shout box so that he can give a web address, and then we could orderly, if at all possible, bring them in a streaming fashion if you've got your camera plugged in and are ready to go. Now, my first guest today is Jake Bernstein. We've got a lot of charts, and we're going to walk through those and see if we can alpha test and integrate this new technology, which, if it works, this is fully interactive television. Ladies and gentlemen, you're seeing it firsthand on our show. Let's bring in Jake. Jake, how are you?
Very good, Michael. How are you?
Oh, and you got your camera working beautiful?
Got the camera.
All right. How are you doing out there? Here's a lot of fires in Santa Cruz lately.
Yeah, the fires are in the mountains, not that far from where I live, probably about 15, 20 miles. But we're doing okay.
South or north of you?
South of me.
Oh, Corralitos area.
Exactly.
I used to live up there, by the way.
Well, you know well. That's exactly where the fires are.
Oh, Chad. All right, you got a zillion charts here. The first one on my desk is the crude oil. Is that where you wanted to start?
Anywhere you like, Michael, fine with me, and thanks for having me on the show.
Oh, my pleasure. You're having a seminar this weekend, right?
Webinar this weekend, yes, tomorrow.
The Big Kahuna.
The Big Kahunas.
All right, I think we're going to start with crude oil, right?
You bet. That's fine.
All right, Don, let's bring that crude oil up. Now, by the way, I didn't get a chance to introduce you. This is Pete to my right.
Good to meet you, Pete.
I can't hear him.
Oh, okay, and he said, good to meet you. I guess his IFB is, they didn't give him an earpiece.
They gave me an earpiece, but I can't hear it.
Oh, okay. All right, let's bring. We got the crude oil.
There's the crude oil and comment. Very, very simple. A lot of people are waiting for top in crude oil. Look, it's going to be a day-to-day thing. If we look at it with total objectivity, what I have on my chart is the moving average channel, two lines, the 10-period moving average of the high, which is the red line. On top, the 8-period moving average of the low. On the bottom, I've got my confirming indicator, which is Williams accumulation distribution and its moving average. This market has been in an uptrend for a long time. There is absolutely nothing on this chart to indicate that we are about to top. It's an orderly, reasonable bull market. We do have some bearish momentum divergence, but as I always say, momentum divergence is a setup, it's not a trigger. So if we don't have a trigger, we don't have a trade. If we come back down to the bottom of the channel, as we have a number of times since the start of this bull market, it's more of a buying opportunity than anything else. The thing that's most interesting about the crude oil bull market is what it tells us about the other markets, not what it tells us about crude or heating oil or natural gas. If you look at markets that have been following the crude, sugar, corn, soybean complex, even gold. These markets have all separated from crude, suggesting that they are now in short-term bearish trends, and the crude is no longer the major influence on those markets. So there's the analysis on crude, Michael.
Okay. All right. I've got resistance in short-term at like $142 a barrel. What's your thoughts on that?
Wouldn't surprise me. You know, it's very hard to predict prices. It's easier to predict time. One of the things we know about the crude oil market historically is that it tends to be a low in August. So typically, at this time of the year, we would top seasonally. We'd come down until August, and that's when I think some major lows will be made. So while I am looking for a top, I don't have a trigger yet. And in the absence of a trigger, I'm hesitant to. In fact, let me share this with you. One of my clients was recently in Russia. And let me see if I can show this on the chart on the screen here. She sent me this is a sign. Let me see if I can do this right. This is a Russian bear market. It's a street sign. You know, here we have deer crossings. Over there we've got bear crossings. And you know, I use this sign to indicate bear market. So we got to be careful. It hasn't started yet. All right.
Now, I guess that's a segue into the Dow Jones.
Segue into the Dow Jones, and in spite of what the forecasts have been by the so-called experts, the bottom line is we've got some sell triggers in the Dow. In fact, two sell triggers, one which occurred about a week ago on momentum divergence, another which is most likely triggering today, and I don't have the closing prices in yet, so I can't really be sure about that. But the bottom line is we have some bearish activity here. Now, that being said, I'll go back to the forecast that we had for years numbered 8, and again, I want to stress, it's not numerology, not Fibonacci, not Gann-Elliott wave, or any of that stuff. It's simple history. Years number 8 tend to trade between their January lows and January highs, resistance at the January highs, support at or near the January lows. A monthly close, a monthly penetration close above that high or below that low is significant. That's what we need to be waiting for. Years number 8 have usually turned out to be sideways, choppy markets,
yes,
unless we penetrate that January high or January low.
Okay. All right, I got it. So
there you go.
I got it. Sell trigger, second trigger developing.
Exactly. And again, not a big deal as far as I'm concerned. We probably have support coming toward the January lows, which is the lower end of this chart. It's very much of a trading market, and really one of the strangest markets I've ever seen, because we've got some stocks that are absolutely soaring, stocks that are extremely strong, and then we've got stocks that are extremely weak. General Motors, for example, making its 20-year low today. And my inclination is, hey, you've got to buy them when people hate them. You have to look at stocks like GM, like GE, good old-fashioned mainline, mainstream American stocks, high-cap stocks that have potential, might suffer for a little while, but these are the ones to look at. We've got some airlines, no kidding, airlines, major lows or major moves down this week. Take a look at them. What's the risk? Well, yeah, the risk is they may go broke, but at some of these prices, you look for timing, you get a timing trigger, you take a shot.
Okay. I've got a couple of questions that showed up on the shout box. Let me shoot them off to you real quick. First one, Roger says, hello, Jake. What spreads would you be looking at these days?
I like a lot of the grain spreads. There are some seasonal spreads right now. For example, buying the July corn, selling the December corn, buying July wheat, selling December wheat. You've also got some spreads developing in the inter-commodity spreads, especially in the currencies, such as buying the Aussie dollar, selling the European currency, buying the Canadian, selling the euro. And, of course, the good old standard, in a bear trend in the currencies, you buy the Swissy and sell the euro. In a bull trend, you buy the euro and sell the Swiss. So I'm looking for a top in the currencies, a secondary top. The first one has been made. I think the dollar has bottomed. So if that's the case, the euro declines, you buy the Swiss, sell the euro. Take a look at that spread. It's a very interesting one. And, of course, I like the meat spreads. July-December hogs, June-December cattle. A little bit late for the June-December cattle, so you'd want to do the long August, short December cattle.
Got it. All right, second question here. It says, Curious Trader wants to know, Jake, your thoughts on sugar. Are you still looking for a move to the 25-30 cent range by October?
Absolutely. I'm looking for sugar to become an explosive bull market, and what we see here with the sugar, again, having separated from the big rally and the energies, is a drop to monthly support. So get your monthly continuous sugar chart, look at the moving average 10 high, 8 low, and don't catch the falling knife. Only get into this one after you've got a short-term buy trigger. That's my outlook on the sugar.
Okay. Now, let me take just a second here, Jake, to let everybody know how this works in regards to this new technology. Ladies and gentlemen, in the shout box is a link, and it's also a phone number. So if you've got a camera, all you have to do is click on that link. You'll come into a place where your video, if your camera is up and running. Is that right, Pete?
Yeah, well, they're going to have to put in the code, Pete.
Right.
Okay, but other than that, yes, the camera will turn on when they log into that link.
Right.
And at that point, it might ask them to have preferences on either their mic or their camera.
Right.
And just pick default.
Right.
And then hit webcam start.
Right.
Once the webcam started, hit broadcast. He'll be in a broadcast with us.
And then we'll bring your video, streaming video picture into our scene so that you can ask Jake the questions yourself.
This could get interesting, Michael.
It could get very interesting, yes. Yes, we're waiting with the panic button for in case it gets too interesting. And then there's a phone number. You just pick the phone up and call. We'll patch you in so that you can participate. All right, Jake, now the next one is Euro FX that I've got up here. There's a lot of questions about this Euro market.
Well, this is probably one of the most beautiful charts technically that I've seen in many years. We have made a top in the euro that was a bearish momentum divergence top, and I've indicated that by the red line on top and the red line on bottom, showing that as the euro is moving higher, momentum 28 was moving lower. We triggered a sell. The decline was very, very good, and now we've come back up to the range of the highest bar on the chart, and that's what I call spike resistance. This is not a trend line, but what I'm doing is I'm taking the low of the highest bar, I'm projecting to the right from that low, which gives me resistance. That resistance level has been tested just in the last few days. Market's been unable to penetrate that, and it's not unusual in bull markets that have topped for the price to come back, test resistance, and of course, it's a question of how you determine resistance. Many different ways. Some work, some don't work. This is my method, or one of my methods, spike resistance. If the work is correct, we should find resistance not only at the low of the last high bar, which is the highest bar on the chart, but in the range of that high bar, and then come down and fail. So that's what we're looking at here, and as I said before, I'm fairly confident that we have seen a low in the U.S. dollar. The next few days, I think, will tell the story. If we can rally the dollar on into early next week, we will probably move considerably higher over the next few months.
Okay, I've got a little question for you. It says 1.580 for the resistance, but then you mentioned a range off of that highest peak price. What's the other end, the higher end of the range that you're looking for this to top out in?
Good question, Michael. The range would be the range of the entire bar of the highest price on the chart.
Right.
Resistance begins at the low of the high bar, and that's the number that I have in there.
I got it.
So that entire bar, the entire range of that high bar is resistance. Psychologically, technically, there should be a lot of selling there. I believe that's what's happening right now. Even though we're a little bit higher on the euro, the bottom line is major resistance area. Next few days, I think we'll tell the story. It'll either make it or break it, and I think it's going to be on the downside.
Okay.
Hey, Jake.
Yes.
I have a novice question. This is Pete, and assuming I'm going to Europe anytime this year, what's the best time for me to go based on the euro versus the dollar?
Best time to go, I'll give you a projection, probably August. I think by August the dollar will be substantially higher. You'll get more for your money. Right now you'll be robbed.
I understand. Thank you.
Okay.
All right, so I've got that pegged. I pulled up my FX chart, and about looks like the top end of that range would be about 160.
And let me add to that answer. You're better off going to England than you are going to Europe because the pound's considerably lower than it was before.
Oh, great.
Okay. You'll still pay $80 for lunch, though.
I know that.
Yeah. I had a friend who just came back from Switzerland, and they lost his luggage when he was over there, right?
Yeah.
So he had to buy briefs and all kinds of stuff, right? $50 for a pair of underwear.
Oh, believe me, I know it. I know it.
It's amazing, and we're whining. Okay, the next thing up, I have got orange juice.
Orange juice. I'm going to go on record as, again, stating that OJ is one of the big markets that I want to watch. I'm not talking about a weather play, although it is certainly possible, based on the forecast that we've been getting, that weather is going to be the stimulus for this move. Certainly you don't have to be a rocket scientist to figure that out. But the issue here is this. As prices have continued to move lower, we've seen momentum continue to move higher. In my work, that indicates professional accumulation. It's a setup, not a trigger. I would not run out and buy the OJ right now, but we're getting close. Every day that passes, I think we get closer to a major explosive move in the OJ. And as I've said before, OJ, geez, I have hardly traded that market at all in the last 25, 30 years, but it's getting to that point where I'm very interested in it. We had a move a few years ago. It was a huge move to record highs. I would not at all be surprised to see something of that nature repeat, and we're getting closer.
Okay, we're going to need to go to a break right now. Jake will be back with more of Jake Bernstein, Pete Iannashi, and please, ladies and gentlemen, don't be afraid. It won't hurt you. Click on the link, add in the passwords. They're in the shout box. Join us in the show rather than just in the shout box. Let's see a streaming video. Ask Jake some questions. We'll be right back after these messages.